quick look at my positions. So if I go to the positions watch list and see the bid-ask spread on these will tell me how things are moving pre-market, because we still have a few minutes before the market opens. Coinbase is moving. Coinbase is going to open down about $4. Obviously, that's tied to the move in Bitcoin. Bitcoin's going lower. Coinbase typically trade lower. Intel looks like it's going to open a little lower. Nvidia is going to open up about $2. Nvidia had a really crazy day yesterday. Look at that candle. So Nvidia gapped up in the morning, and then it just sold off. Yeah, so it opened up at 153 and change, which, I mean, that was a gap of about $4, right? It's a pretty big move on the open. And then it just sold off all the way down to 140. So that's like a $13.50 reversal on a stock that's a $140 stock. That's just a gigantic swing. And that did hurt my put credit spread, because my put credit spread that's just been languishing I've been in this trade for 2 months. And then when I got the gap up yesterday, I'm like, yes, finally, I'm profiting on this trade. I might be able to get out of it for a profit. And then it just steadily sold off all day and just crushed my dreams of finally being able to get out of this trade. You guys in the chat, yeah, good morning. Happy Wednesday. The market is confused. Yeah, I would say so. And it does have that kind of feel. It's like, I think the market, we want to go up, but at the same time, some people are, I think they're just waiting. They're waiting for some stuff. They're waiting for the new administration to come into office. They're waiting for more Fed stuff as far as interest rates. Some people are just nervous. But typically when you have this, eventually their fears will calm down a little bit, and eventually you'll see this thing start going again. XHB might be crushing your dreams. Yeah, let's check out XHB since we both have that position. Down about, well, it's hard to say because it's a very wide bid-ask spread. Looks like it's going to open down, though, probably 50, 60 cents, which isn't great for me because I have a lot of positive deltas on this strangle. You can see it's already trading around 103. My short put's only a 100 put. I've already rolled this thing 5 times, right? Adjusting strikes and expirations. I don't know if I'll make an adjustment today, but if it keeps going lower, I may have to roll it a 6th time to protect this put, but we shall see. A few new trades today, but quickly, I just want to check my existing positions. This iron condors, you got to have a little bit of time to pass. Only been in it for 2 days. Amazon is hanging out in the right general range it needs to, so nothing to do there. It's working. ARKK, this strangle is down a little bit today. I'm exactly delta neutral on this strangle. I have 0 deltas. So ARKK is dead smack in the center, delta-wise, of the strangle. It's fine. Now, why am I down on the position? If it's essentially a 0 delta trade, and if that's where it started live, I don't remember if I started this thing exactly delta neutral, but it's possible that volatility is rising in this thing. You can see the IV rank at 65. IV going up, going to hurt the options pricing. It's going to make the options go up in value. Obviously, when you're short options, you want the options to go down in value. So when you buy them back cheaper for a profit. Now, Coinbase had an ugly day yesterday, down about $23, $24, which really crushed this $10 wide put credit spread here. See, I'm down on the position. Still have a lot of time. I still am out of the money on this. It hasn't gone down enough to where this put credit spread's in the money, but I need Coinbase to start going back up. Coinbase, if I put on the position back here somewhere when Coinbase was trading well above 300, probably 330, 340. Coinbase is trading in the 260s right now. So big sell-off since putting on that credit spread. This thing has sky-high IV rank. Or not IV rank, but just the implied volatility itself. You see implied volatility, 85%. It may have been higher than that when I put this trade on. So even though at the time Coinbase was trading at 330 or 340, I was able to sell a put credit spread all the way down, like 250 for the short put, 240 for the long put. and receive a very decent premium. I think I received like 275, 265 on that $10 wide put credit spread, and selling that like $80, $90 out of the money. So I was able to get really far out of the money for a really juicy premium on that. So it was a nice trade. If the same thing came up today, I'd take the same trade. It just hasn't worked out because Coinbase has sold off. Again, we're not in a lot of trouble yet, but it would be nice if this thing traded back $20, $30 higher. It would really erase all those losses. Actually, one thing I want to do before we continue, because I forgot to do it, I meant to do this on Monday. I was going to share with you guys my quarterly predictions, because we all did, I hope we all did the Guess the Market game with Tasty Live, trying to win a free $1,000. So I'm just going to paste my 4 quarters. Those were my numbers there. Obviously quite bullish. We opened the year in the, what is the SPX? Because it's the index, not the futures. Yeah, 5,900 in the SPX. So yeah, 1,000 point gain if we end up at 6,900 at the end of the year. So pretty good year. Let's take some trades. So first thing I want to do, typically I would go to my go-to kind of strategies, selling puts and ES or MES, selling put credit spreads and SPY or the Qs, or maybe even IWM would be a great thing to sell a put credit spread on today, being down so big. All right, let's take some trades. Like I said, typically I do some short puts and MES or put credit spreads and SPY or Qs. Now the SPY and Qs, because I already have these trades on that have been in for a while, and they're kind of problem trades, I'm not going to take a new trade in them just yet. But MES, I don't have that many naked puts. 3 in that expiration and 2 in that expiration. That's only 5. I could certainly sell more puts if I wanted to. So typically on these, I go out about 90 days. There's not a 90-day cycle. There's an 82-day cycle. Typically, I go out to about the 10 delta mark, sometimes a little further. For example, this right here, about the 10 delta. It's actually the 9 delta, but it's a nice round number, 5,200. What is the credit on that? 32. Now the multiplier on the MES futures is 5, so it's 5 times 32. So that's 160 credit on a buying power reduction of only $571, because you get extra leverage on futures products, right? So you get really low buying power, much lower buying power trading the futures than you do stocks and ETFs. But be careful. Just because you get that extra leverage, don't go and load up on 1 million of these puts, because if the market did crash, you'd be in a lot of trouble. For me, I'm just going to add, I'll just add that 1 put, because I may trade some other things. I may come back and double up that put later, or, but we'll see. I don't want to use too much buying power, because I may put on a few different things. So GDX, I mentioned GDX earlier. I've got the shares. Could I sell a covered call? Now, covered call, typically I'd go shorter dated, about 3 weeks out, and try to sell something around the 30 deltas. But the problem is that's below my cost basis. My cost basis is about 38.50. And yeah, I can't get a decent premium with such little time. So I'd got to go out more time if I really wanted to sell a call. I'd sell the 38, which would be okay. It's a little bit below my cost basis, but what I could do to make up for that, I could also sell a put, right? We could do a covered strangle, 44 days. I'd receive 127 credit, buying power reduction of only $402. So that's very nice. If it goes above $38 in 44 days, and I get a sign, my shares get called away a little bit below my cost basis, but the credit actually more than makes up for that. So I'd actually profit on the trade. It wouldn't be a great profit. But you know what? I have 200 shares. I should have sold 2 of these. There we go. Now I receive about $2 credit. Or I could actually widen this out. Yeah. Now I'm definitely, I profit on the shares now, about $50. Well, times 2, I'd profit on the shares $100, and then I have $154 credit. Overall, if it went up above 39, I would profit about $250 on this trade. That's not a bad profit. Now, if it went down, I still keep the credit, $154, but I'd have to buy another 100 shares of GDX at $33, which is also not a bad thing to do because my cost basis is way up here at $38.50. I wouldn't mind taking another 100 shares and lowering my overall cost basis. Yeah, I got a little more risk now because instead of 200 shares, I got 300 shares, but it is a low-priced stock, right? So I don't necessarily mind doing this covered strangle. It's a little bit of a weird covered strangle because I'm going to do 2 calls, 1 put, but I don't hate it. And it is very low buying power because the calls are covered, and the 1 put, really doesn't take any buying power. Matter of fact, this whole buying power reduction is just for the 1 put because the calls, again, are covered. Let's see if they'll give me this 156 on this. Yep, got filled. Some other things I've been thinking about that I haven't traded in a while. You know what? I haven't traded Robinhood in a while. This is usually a pretty good trading vehicle because it's low priced, but it has really good IV most of the time. You see it's trading near its all-time highs at $40. Wow. IV rank of right around 40. IVX of 78%. Really good IV. Does have earnings coming up February 12th. That's still a month away. So I could be in and out of this thing, no problem. So typically on something like this, since it's a low price stock, if I was bullish, wanted some more long deltas, I'd just go sell the 16 delta put for 104 on a buying power reduction of $800 and call it a day. Since it has really high IV, I might want to really take advantage of that and maybe sell a strangle. I go 11 deltas, the 30 put and the 60 call. That's about a 120 credit on a buying power reduction of about $800. Now, maybe I'm a little too far out. Maybe I'll lean in a little bit. Maybe do 16 deltas on each side. 183 credit on a buying power reduction of 803. 74% probability of profit. The P50 number is around 82 to 84%. It's moving around a little bit on us. But really good premium on a pretty decent buying power reduction, right? I don't hate it. Now, strangles work a little slower than just selling a straight put. So could I be in and out of this thing in the next 30 days to avoid earnings? Most of the time I would say yes, but it's a little less certain than just selling the put. I may just sell the 16 delta put here. Just receive that 107 credit. Not as big a credit, but typically these trades work a lot faster. I'll be in and out of it much quicker than the strangle. Let's see if they'll give me 110. It's probably more credit than they'll give me. Yeah, mid price is 107. Let's take it down to 108. Got filled at 108. Got a short put now in hood. Semiconductors. I got out of AMD the other day for a winner. Nice little winner. I got out of AMD, by the way. I had a short put on it. And I got out of it at just the right time. I got out at the very top of this candle. I got to like 46, 47% max profit. Not quite 50, but I got really close. And I thought the market might turn around because it's had these big swings a lot recently. So I went ahead and took that off for a winner, which was perfect because it immediately sold off and sold off hard the rest of the day. And then it's selling, it's had a down day today, down $5. So this is perfect. I got out of the last put at exactly the right time. And then with the 2 big down days, it's perfect to go and sell another put. Now AMD has earnings February 4th. Again, this is a little less than a month away, but just selling a put, typically if they work out, you'll be in and out of them within, 2 weeks, typically, maybe 3 weeks. So what was the last trade I did? Sold the 105 put in the February cycle. I'm going to still stay in the February cycle because I don't want to go to the March cycle. Plus, I'm going to be out of this thing by February 4th anyway. So I'll just stick to the February cycle. Instead of doing the 105 this time, this thing has dropped in price to where I can go with the 100 strike, which is the 11 delta, premium of 123, buying power reduction of 1,000. That's okay. That's not bad. Put that in for 123 credit. Looks like mid price is 121. Take it down to 122. Got filled at 122. So there we go.